Good evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Leroy Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here.
Hey Tim, can you hear me? I can't hear you at all. Can you hear me? You can hear me? I can't hear you. Something going on. I don't know. Do everybody else hear you? Oh, okay, okay. They don't want you to deliver that good news to us, man. You give them too much information. Something going on. Who play hating? Man. You messed up when you say you're trying to build a Wakanda.
Check, 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 check.
Okay, you there. I hear you now.
All right, man.
I thought it was my phone.
Uh, yeah, hold on. Yeah, hold on 1 second, man. Yeah, hold on 1 second. Oh my goodness. Anybody who having issues with the smart money manuscript, is it just on your phone or is it on your computer too? Because when I was testing it, it was on my phone.
Just on my phone.
Yeah. When I was testing it was on my phone and now they pissing me off because they what is the specific what is the specific code to better help us? Is it on a computer or is it on a device? All right. Let me see if I can. Y'all give me 1 second, please. Like I'm having technical. It be so hard getting in touch with these people, and when I get them, it's always at the worst time ever. Mm, Where is that? Oh, there it is. Oh, it did go through. All right. I can see you've uploaded a file, but I'm not able to view the content. What? Oh my God. Oh my God. Yeah, hold on for a second. I'm sorry, y'all. Y'all hold on for a second, man. Just don't piss me off. Uh, 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 oh my goodness. Um, it probably would have been it probably would have been smart of me to start doing this like earlier today or later after I had I'm trying why is it? Oh, let me try. Hold on. I know what I can do. Oh my God. Yeah, hold on, man. I'm so frustrated right now. I don't know how I get when I be I get frustrated. I'm about to say forget it all. Turn my computer off and go lay down on the couch. Okay. Can you describe what file your screenshot error message crash? So since you experience constant crashes with Smart Manuscript that prevents module completion and happen during quizzes, see. Why are these pictures coming out like this? Not wanting to let me save a JPEG picture. No, I can't even save a JPEG picture. What in the world is going? Oh my God. Oh my God. When I tell y'all this thing won't even let me save a JPEG. Let me try some. If this don't work, I'm just gonna say forget it. When I tell you that, can you describe? I am the creator, freaking idiot. There's some kind of JavaScript error that's showing up. And I was trying to upload a screenshot of what it's doing, but can you describe JPEG you uploaded? Here's a screenshot of the crash and error or the quiz interface. Thanks. Thanks for providing a specific error message. This type of error typically occurs when code is trying to process data that's undefined or null. Since this is happening during quiz completion in your course, it's likely related to how quiz responses are being handled in the mobile app. The Hermes.js engine confirms this is happening in the mobile app version of your course. I don't have specific technical details needed to troubleshoot this particular JavaScript in your course. Have you recently made changes to your quiz that might have? No. Anyway, man. Since you haven't made error might be related to an existing issue that's now affecting mobile users more frequently. They cannot read property trim of undefined error suggests that somewhere in the quiz processing code, the system is trying to clean up text data that doesn't exist. This could be happening with quiz answers, user input, or course program data. Since this is a technical issue with your course platform's mobile app functionality involving React Native and the Hermes.js script, this requires debugging at the code level to identify where undefined data is being processed during the quiz completion. Have you noticed this error happening at specific points of the quiz, like when submitting an answer, or does it occur randomly? How y'all doing today, man? Y'all see what I'm dealing with? Y'all see what I'm dealing with? We're gonna go ahead and get right into it, man, since I don't know, wasted all this time. That's helpful to know the error occurs, specifically when the quiz is complete. This suggests JavaScript error is happening during the quiz submission or completion process, likely when the system tries to process or save the quiz results. Since the error cannot read property trim Undefined happens that the quiz completion is probably related to how the mobile app handles quiz data when marking it as finished or calculating a score. The technical JavaScript error in your course platform, React native mobile app, is outside the scope of the support I provide. I focus on what market features rather than course platform technical debugging. For this specific React Native and Hermes JS engine error, you need technical development support to identify the undefined data being processed during the quiz completion. Good evening, good evening, good evening, everybody. Um, um, now that I've separated the wheat from the tare, all right, I would like to say, if this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tits, Jesus Christ. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome, and I want to give you a nice hearty thank you for always tuning in to Tim's Tidbits. As y'all can see, old Satin has been very busy today. Lucifer himself has been very busy today. Technical difficulties with my course platform, right? People go in and take the quiz. You go through the video, it don't let you mark it as complete. You take the course, it won't it says it's error and is acting crazy on I didn't try it on the desktop. I was trying it on the mobile, but I didn't try it on the desktop. But the mobile app is acting crazy right now. Right. So I don't know. Then come in here, can't nobody hear me on the microphone, trying to talk, the mic not working, right? And all kind of stuff. Satin and Lucifer are busy today, but nonetheless, we are going to push through. If I could put my trading view on the right screen. All right, I'd like to say welcome. We know we got Lump in here. I heard Lump talking earlier. I see we got Jim in here. We got Yolanda in here. We got Jada. We got Rhonda in here. We got Felicia up in here. We got Kim in here. Y'all, well, I know the people in Zoom still here. Who all still over there in YouTube? If you still over there in YouTube, do me a favor. Just put something in chat here, one, whatever. Put something in the chat so I can see who in here. Venus still up in here. All right. Who we got over there? Steve still up. Steve said present. Okay. All right. Appreciate y'all for hanging out and waiting through the foolishness. Let's go ahead and get into it, man. Somebody didn't want to be noticed because when I asked people to put something in the chat to see who else, people started leaving. the number started going down. People started leaving. Let me go ahead and click this right here. Make sure everything is right, and then we're gonna start. Clickety click, click, click. All right. Okay. even when I look at it on the back end. If I look at it straight through YouTube, or if I look at it through the back end, it still thinks that Hit Learn and Share is a spam bot. It automatically hides all of Hit Learn and Share's comments. It automatically hides it. I have to go on and click it to a different chat in order to see anything that Hit Learn and Share posts on YouTube. It thinks that you're a spam bot. All right. Let me go ahead and share my screen. And while I'm sharing my screen, I like to ask the question that I always ask every single day. Did Price do anything today that caught you off guard? Did Price do anything today that was unexpected? Did you anticipate Price to rally, but it dropped? Did you anticipate it to drop, but it rallied? Were you bearish and the market took off to the upside? Were you bullish and it took off to the downside? Did Price do anything today that caught you off guard? While I get me a sip of high quality H2O, y'all go ahead and put it in the chat. Not really. I was looking for an upside after the gap fill. What gap fill? We had a gap fill. Talk about when we traded down near the bottom of the new week opening gap last night, overnight, during the London that we talked about. All right. Okay. Looking for upside after the gap fill. Okay. That means you was on the right side of the market today. You and the algorithm, you and IPTA was seeing eye to eye today. Right? Take your arm, do it like this right here, stretch it out, fold it like this right here, and pat yourself on the back. You were seeing Price as IPTA intended on you to see Price. Anybody else? Anybody see something, thought you saw something, and then IPTA did something totally different? That's it. Y'all just here to hear me talk. Y'all think I'm gonna drop some?
Yes, we're here to hear your wisdom. But yeah, at the 6 p.m. New week opening gap, it looks like we defended the lower quadrant.
Mm-hmm. Yeah.
And it just seemed to chop upwards since.
Yes, we did. We came all the way down there to that lower quadrant. Didn't quite fill the entire gap. All right, let me go ahead and share my screen again. Screen. Oh, I'm already sharing my screen. I stopped sharing it. All right, we didn't quite fill the entire gap. All right, because we look here, this is the gap low right there. We didn't quite fill the entire gap, but we came down to that lower quadrant, right? Got a slight closure below that lower quadrant, and then we immediately rejected it and went all the way back up above the upper quadrant and closed above consequent encroachment. Then after that, we never got a closure below that lower quadrant again. We did sweep liquidity at 5:30, but then that was the end of, that was the daily low right there. That 5:30 candle on the 15-minute time frame was the daily low right there. And then we just rallied for the rest of the day until about 11:15. Then we hung out a little bit, moved up a little bit, then hung out for the rest of the day. Not much going on after 1:15. 1:15, if you were still pushing buttons, you were getting your head chopped up if you was going for anything more than a scalp. If you was going for anything more than a scalp after 115. Hoo. You were in for a rude awakening. Yeah, man. All right. Today is Montag. Today was Montag. So let's go out and look at our daily time frame. Matter of fact, let's just go out and look at our weekly time frame. All right, since it's Montag. Right. Look at that. Look at that move on this is a weekly time frame, but all of this price right here is from Monday. That's all from today. IPTA said, I'm fun to handle my business for this little 3-day trading week. Right. We got Thanksgiving coming up on Thursday. Right. We got Thanksgiving coming up on Thursday on the 27th. So we got today, Tuesday, and Wednesday. Those the only full trading days. And then when the market opens, I think the market opened up like Wednesday night. I think we looked it up. When it opens up Wednesday night, I think it's closing like early on Thanksgiving because the market is closed. The New York market is closed, right? It's closing like, I think we looked it up. I think it was like around about 1 o'clock, I think. And then it's opening up again Thursday night at 6, but then it's closing again on Friday at like 12, I think it said. Right. So pretty much ain't no trading after Wednesday. Right. Thursday and Friday could put, it's just little short days. By the time you wake up, it's gonna be closing. Right. Let me see here. Y'all know I'm like, last time I looked this up when I went to the CME website, it gave me a headache trying to read it the way they got it typed out. And then it'd be in Central Standard Time, so it'd be making me mad. All right. So Thanksgiving, equities, right? On the 26th, that's Wednesday, right? It closes at 5, right? Let's say 1600, but it's Central Time. So it closed at 5, right? And then it Thursday, right here, it opens at 1700, right? And then it closes again. So there's no trading at all on Thursday. So it's closed on Thursday. For some reason, I can read it clearer today, right? So Wednesday, it closes at 5, right? And then it opens again Thursday at 5. Oh, it said open it. It said
Yes,
open.
she
It
opened
opened
at
at
5,
5.
right?
Yeah. Yeah.
On
So
Thursday.
open at 6. Open at 6. See, it always be mess me up, right? So all right, so it closed at 5, then it opened at 6. And then when you come over here, right? So this day here, that means it's closing at like 12 or 1 because it's got like a pre-open. See what that's pre-open at 12 o'clock, right? So that means it's gonna close at like, so it's closing early Thursday and then it's closing early Friday, right? Because see, it said open at 1700. Open at 1700. Okay, so yeah, so it's closing early on Thursday, but it don't have a close on Thursday. You see what I'm saying? That's what's messing me. That's what's messing me up because it don't have a close on Thursday. Because if it open here on Wednesday at 6 o'clock, it's got to close at some time because this is the holiday and it's not. You see what I'm saying?
Look at the one above. It says Wednesday 26th, but then Friday open. So I guess it
Because
closes.
it's show because this is the actual day that it's counting toward. You see what I'm saying? You see how I said that's the day that it's counting toward. Like
Oh,
there's no trading on Thursday, so the 27th don't have a trading date.
sure.
So this open right here at 6 o'clock on this day is for Friday,
Got it.
but it don't show when it actually closes on Thursday. It just shows that it's reopening at 6. Right. See how here's got like a close and there it's got a close. It just says it opens at this time and then it say pre-open at 1:30 and then open up at 6. I mean 2:30. Pre-open at 2:30, then open up at 6. And for equities, it say pre-open at 1 and then open up at 6. I'm looking at the wrong one. So only thing I can say is the market closed Thursday and Friday. If you want to get in and trade during the Globex times, it'll just expect it to be open from 6 p.m. Wednesday night up until around by 12 or 1 on Thanksgiving, and then 6 p.m. on Thanksgiving up until 1:15 on Friday. Me personally, ain't nothing going on them 2 days. All right. Core PPI retail sales, unemployment claims. The news been so, everything been so, some stuff been dropping, some stuff been delayed. I ain't even paying attention to the news until after everything get back in order, right? Until see right here how that's blank, ain't nothing going on that day, right? But as you see here today, right, we're supposed to have Chicago Fed National Active Index delayed, right? It's a delayed. That mean it didn't drop, right? That mean it didn't come out. So then tomorrow we got all of this right here, and it's already saying delayed, right? So it's probably not gonna drop. Right? The only thing that might possibly drop is the consumer confidence because it don't say delayed, but we'll see tomorrow to see if it actually drops. None of the news is dropping. I know CPI didn't drop last week. I don't think it did. Um, it's a bunch of stuff that ain't been dropping. But again, I haven't been coming out here and like really looking at it like every single day because everything has just been out of whack. And then we got GDP, durable goods, and all this stuff right here that's saying that it's supposed to drop. Right now, this PCE is saying that it's supposed to drop, but we'll see. We will definitely see. Because the news has been very weird lately. Okay, so it's saying that this NFP actually came out last week. All right, it's got an actual number there. All right. Yep. So it's saying the NFP actually came out last week. I was looking back to see if this actually dropped last week. So the NFP actually came out last week. So we'll see how it plays out. I don't know what it was. I don't see it on the count. When was CPI? I thought CPI was. Am I tripping? I'm gonna do this right here. Crude. Let's see, FOMC minutes. Why am I not seeing consumer price index? Am I tweaking? I don't know. Maybe they don't keep it on there if it didn't release. I don't know. Anyway, tired of looking at that. Let's get back to the charts. Last CPI was October. Okay. All right. So looking at our weekly chart, all right, we came down into our bullish order block and we got that discount sensitivity that we was talking about, trading down into that bullish order block right there on the weekly. Then we closed back above this bullish fair value gap, right? So we came back down to the reclaimed fair value gap, came back down to the order block. Say, Tim, we never closed below it. Why you calling it a reclaimed fair value gap? Because Michael teaches, right? You have a fair value gap. Once you trade away from it and come back to it, once you trade up and come back to it again, and I say reclaimed fair value gap also. There's two different ways he teach reclaimed fair value gaps, all right? Came back to the reclaimed fair value gap. Why is that? Because you traded down, repriced some of it, traded away, came back down, reclaimed it again. All right. So once we came there, we took out, swept the liquidity, right? Traded into the order block, got our discount sensitivity there, closed, respecting the fair value gap. Then now we had a bullish gap open this week right here. It was a pretty nice size gap open. We gapped up 106.75 points. So just short of 107 points, right? Huge gap up on the NQ, right? So we gapped up 100 and pretty much 107 points, right? Retraced back down to the lower quadrant and then had the rally of all rallies during the New York session, right? During the Asian and the London, it was kind of like a consolidation and a manipulation, right? And we'll look at that as we go into the lower time frames. All right. Again, we can see here where we came down on the daily time frame. We have a y'all can't tell me this stuff don't work, man. Y'all can't tell me this stuff don't work. Right? So when we look at what we have marked out here, right? This dealing range that we got marked out here, this low, this high right there, that's the lowest low and the highest high, right? For our 60-day IP to look back, right? We marked that out, a few days ago, whenever it was, all right? When we look over here, right there, that right there is the very first daily, it's daily now, very first daily bearish fair value gap that was created. And this move down here before we came down, swept that liquidity. See the discount sensitivity off that liquidity right there. Swept that liquidity, right? Traded up, came down there, traded below there also. Then when we rallied up here, when we traded above that opening price right there, that gave us a change in the state of delivery. So this is the very first bearish fair value gap that was created, and this move right here. All right. Don't get caught by the magical all of that, right? Right. Why do I say don't get caught by the magical womp womp? This right here, that little pump fake right there. Don't get caught up in that little pump fake right there. All right. Who can tell me why I say don't get caught up in that pump fake right there? All right. Why I say don't get caught up in that pump fake, and I'm watching this right here.
Maybe because they're just a manipulation.
Yes, it's a manipulation, but this right here, what did the elephant step in the pool?
You step in the pool in a green camera right there.
This is when we can't see what's coming. Like the what I always say, follow the money, right? The elephant stepped in the pool. The elephant stepped in the pool. The elephant stepped in the pool, right? So it was coming down, and we started going up here. We never pushed up past that high. We're still inside this bearish dealing range right there. Only thing we did was retrace back to a premium, come down and extend it ever so slightly. So this right here is just all one down move with a retracement in the middle of it. Right. So all we did was go rank, 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 rank. Right. Don't get caught up with this little fancy little pump fake there. There's your inversion fair value gap sitting right there, because this is when the elephant stepped in the pool. Right. Come down, manipulate sell side, go up, nod them up. That's the inversion fair value gap that I'm watching. Right. All of this right here, this order block, that order block, all these little order blocks that's in here, they're all inside of this huge order block right here. This is when the elephant stepped in the pool, right? This is your order block right there, right? And all of this is happening inside of this order block, right? So whenever you're watching price, you always want to look to the price leg where everything began, right? So if you looking at, ain't nothing wrong with looking at this order block right here. Ain't nothing wrong with looking at this order block right here. Ain't nothing wrong with that, right? Because it's closer to price, right? When you're looking back, but you have to understand it's inside this order block right here. So this is your order block that everything is actually keying off of. These over here, this is just allowing you to refine your entry, because this is where it all started over here. Okay. So boom, boom. The first imbalance that was created before coming and doing something and getting a change in the state delivery. Now we do. Look, let's see this. Let's see. Right. So we created that on this day right here. That fair value gap was created when this day closed. Right. So from there all the way over until when we traded down into it was 65 trading days. 92 calendar days, 65 trading days before we came back to that inversion fair value gap. Right? How many people that you know would be looking 65 days back through all of these candles for price to react off of that inversion fair value gap right there if you did not understand the ICT concepts? I don't know many. I don't know many at all. But you see what price did? We came down into the ICT inversion fair value gap. If you don't understand what make it an ICT inversion fair value gap, me no feel like talking about it again right now. I already said it. Anyway, nice discount sensitivity there, right? That was on Friday. Then we said again today, we gapped up 107 points, pretty much give or take a point. Traded down into the lower quadrant of our new week opening gap. If you don't know what a new week opening gap is, the new week opening gap is the difference between the closing price on Friday and the opening price for Monday's trading on Sunday night, right? That's your new week opening gap. And then we got a nice rally up here right? Nice, super nice rally here. Okay. And then so we offered that opening price right there. So that gives us a change in the state of delivery on the daily time frame. Right. Price came down here, hung out there for a day. We got that retracement back in, right? Traded up into a premium. Then we traded down, swept liquidity right there, right? Boop, swept liquidity right there, traded into an anticipatory reactionary point, and we came back and we offered that opening price right there. That gives us a daily change in the state of delivery right there. All right. Okay. Okay. Right. We came down to the lower quadrant there on the daily. Discount sensitivity at a lower quadrant. Once we get that discount sensitivity at the lower quadrant, right, and coming into a higher time frame anticipatory reactionary point, what did we say was the desired draw after coming to this lower quadrant and coming and trading into a higher time frame discount PD array and seeing that discount sensitivity there? What did we say was a desired draw on liquidity? We said it today on the live stream. Even though the pre-market live stream was a tad bit short, what did we say it was? Come on now, talk to me.
Will you repeat that, Tim?
Cheese and rice. I said once price comes down, y'all be halfway listening to me. Y'all be just have me on as background noise.
I'm listening, but one of my
No,
kids
we're
asked me
listening.
something.
I wasn't on it, and I'm driving.
Again, y'all just use me as background noise. Y'all just use me. My feelings are very hurt right now. After we came down to this lower quadrant right there, right, and traded into a higher time frame discount PD rate and got that discount sensitivity at this lower quadrant, right? What do we say was a reasonable draw or the preferred draw this morning? What are we talking about? What did we say we want? Healthy price action would be for price to draw back to what? Hmm. Hmm. Don't nobody know. Don't nobody remember. How about now? You remember now?
It was that we said that previous day high was healthy.
We said the previous day high was probably going to be taken, but what did we say we want to see price draw to?
Oh, 50% of that previous day's range.
Not the previous day.
Right. Let's see. Where are we? Well, okay. So 15-minute, 60-day look back.
Yes. Equilibrium of the 60-day look back was what we want to see price draw into. And why is that? Because everything that I just said, we had come to the lower quadrant, right? Traded into a higher time frame PD array that was in confluence with the lower quadrant, got the discount sensitivity. So now, since we've come to a bullish PD array, we want to see price draw back to that next quadrant. That's what we want. A healthy price action will be to go back to that next quadrant, get above it, use it as support. Go back to that next one, get above it, use it as support. If this area here where we came down on the higher time frame and traded down into that weekly order block, if that is the area that IPTA wanted to come to and is ready to go higher, Now that it's gotten there, you want to see it start to use these quadrants as stair steps. Why is that? Because when we get our look back range, no matter what it is, it ain't just got to be the 60-day look back, right? Whenever we're talking about these concepts, we always want to understand that time and price is fractal. Yep. Y'all hold on for a second. All right, sorry about that, y'all. I just picked up dinner. My answer is draw back to the low. You talk about when we was talking about what we expect the price to draw to after coming here, after coming there and seeing our discount sensitivity, draw back to the low. No, that ain't what we said. We said draw back to there. All right. We said draw back to there. All right. Like we're saying, when you got your dealing range, right? No matter if it's a 60-day look back, no matter if it's an hourly dealing range, no matter if it's a daily dealing range, right? When you draw these quadrants, right? And I keep hammering this home because it took me a very long time to realize that when Michael says, I know where my PD arrays will form before they form, it took me a really long time to realize that when we draw this dealing range out and put it in the 4th grade, like this right here, we're drawing this not because of this high and this low and everything in between here. It's because these quadrants give us the areas where we can look for trading opportunities in the future. So whenever you draw you get here, boom, right? And you've identified that's the high, that's the low. And price starts coming back down. Now you have specific price points to look for trading opportunities in the future, right? That scary hard right edge that we're all afraid of when price looks like this right here. Now that you've drawn this, right, from this upper quadrant down to this lower quadrant, this is the area here in the future, right, that you're looking for your trading opportunities, right? So as price moves forward, right, you're looking, come here, little fella, there you go, right? You're looking forward like this. This is the area right here that you're looking for your trading opportunities right there. Right. Oh, you two, come here, little fella. Come here. I don't want to leave you. All right. So now let's go and put the meat back on the bone. Right. Leave. And voila. Voila. What? Wait. What kind of sorcery is this? This is a daily time frame. This isn't a 1 minute sorcery junk. This is on the higher time frame where the big money players trade. This is where all the market makers play. The market makers play here. This ICT junk doesn't work on the real time frames. Nepa. What do we have here? We have an upper quadrant there, right? What do we got here? Trading opportunities. Okay. All right. We come here, we trade down below there, exploring below it, right? Create a gap. What are we doing? We're coming out of a consolidation, anticipating this to be a breakaway gap, right? We open up here, trade up, we're respecting the wick, right? Look at this. Watch this right here. You can fractalize everything. All right. We put that wick in the 4th grade. All right. Let me blow this up big so y'all can see this. All right. Look at who stole the cookie. We open up, trade up above that consequent encroachment, fail to get to the upper quadrant, and then poof, drop it like it's hard. Where's that order block residing at? Right there on that quadrant. Right there on that quadrant, selling that bearish order block right there. That bearish order block takes us all the way down to what? That equilibrium, that quadrant right there, right? Got some discount sensitivity off that quadrant right there, right? So since you got discount sensitivity off that quadrant, right? Hey, that thing might go, it should go back up to that quadrant right there. Where did it go? Back up to that quadrant. When it went back up to that quadrant, where did it stop? Stopped at that order block. I mean, that wick didn't get to lower quadrant of that wick. Next day we came in there, didn't get the lower. Well, we kissed lower quadrant of that wick right there and created a BISI right here. Now, riddle me this. Where is this BISI being created at? Where's that BISI being created at? These are the little things that you want to pay attention to, right? Somebody tell me, where is this BISI being created? Let me move all the junk out the way. So y'all can see. Y'all already saw the trading opportunities in between, the high bounced in between. But like, talk to me now. Talk to me. Price came here, rallied up, created a BISI right here. Where is this BISI created at? Is it in a premium or is it in a discount?
It's in the premium of that quadrant right there.
It's in a premium of a quadrant. What?
Between the 20, that 75 and that
the dealing
50,
range.
and that little.
So is it in a premium of a quadrant or is it in a premium in line with a quadrant?
In a premium in line with that quadrant.
Oh, okay. That's what I thought you were saying. Okay. Right. So we come here and we come up there. This is the highest point there, right there. This right here is equilibrium of that range right there that created that BISI, right? So we have a bullish fair value gap in the premium in line with the upper quadrant of our 60-day look back after we've come down and got a bearish break in market structure. So are we trying to buy off of a bullish fair value gap in the premium of our price leg? Or are we anticipating this to be an ICT inversion fair value gap? Which one? Which one are you anticipating? Talk to me.
ICT inversion gap is what we're anticipating after that retrace up.
Now, if you did not have the benefit of hindsight, would your answer be the same? Come on now, y'all talk to me. Be honest.
Not at this point. I would have been looking at, like you said, to see how. I know, babe. I would have been looking to see how it reacted. How it was reacting off of that wick, but no. And without hindsight, I don't think that I would.
I applaud your honesty. I applaud your honesty. Right now, anybody else? Anybody else? And along with applauding your honesty, I tell you, based off what you said, you are 100% right. Right? You are 100% correct, because we never know what the algorithm is going to do. We wait for signatures and we react when time meets price. So at this point right here, the only thing that we can officially say is that the algorithm has created a bullish fair value gap in the premium of a move, right? And we can only say you buy in a discount and you sell in a premium. So therefore, it is a high probability that this will become an inversion fair value gap. That's the only thing you can unequivocally say, because that's the only facts that's on the table, is that we created a bullish fair value gap in the premium of a move, right? And that bullish fair value gap is in line with a quadrant level. And now that we see that it's in line with a quadrant level, the algorithm is not showing a willingness to want to continue higher. So the not showing the willingness to want to continue higher, the fact that it's in a premium, that's leaning toward that becoming an inversion fair value gap, because it's showing weakness. Why is it showing weakness? Right? We traded above, consequent encroachment of the wick dropped, right? Struggled, didn't make it back to the lower quadrant, right? Created a fair value gap, struggled to get to the lower quadrant, right? So now price is not showing a willingness to trade not just above this wick, but even get back to what we anticipated to be a breakaway gap, right? And so now that we have this breakaway gap right here, okay, we are also inside of, right, this BISI right here. So price is not showing a willingness to trade back up through all of these bearish PD arrays. Wick, inversion fair value gap, right, is not showing a willingness to push up through this stuff. Okay. So now you say, Tim, you calling this inversion fair value gap, but it's not the first, because it is an inversion fair value gap. But this ain't the one we're looking to trade off of, right? This right here is just confluence to our bearish PD arrays that's over here, right? It's confluent, is being confirmed by our bearish PD arrays that's being created here, right? So we have this BISI there, and then the algorithm created that bearish order block, right, as price started coming back down. Remember, we said we're looking for opportunities to trade at these quadrants in the future, right? So the algorithm created confluence based off of this. All right. Now, so let's go ahead and put the meat back on the bone. Right. And as we see, price dropped down. And what did it do? Created an inversion fair value gap right there. Not only did it create an inversion fair value gap right there, remember we said we're anticipating this to become an inversion, right? So not only did it create an inversion, it created a SIBI also, right? Now, so when we created that SIBI, okay, when we created that SIBI, right, from here, from right there, right, to right there. What is that right there? When we created this SIBI, right? This is our SIBI here.
That's a balanced price range.
Yes, right? That's a balanced price range. All right. But Tim, why do you say that's a balanced price range? All right. I'm gonna draw this out. Remember where I put them lines now. All right. Remember where I put those lines. Let's thicken them up so we can see them good. Boop. Boop boopy doop. Boo. All right. So it's coming here. Then we're gonna get a BISI. Right. We're getting us a bullish fair value gap. Right. And this is our BISI right here. This is our BISI right there up to there, right? Right, volume and balance there, include that, right? So this is our BISI there, right? So looking at our, if we notice here, right? You see this area here from that wick right there to that wick right there, right? Notice right here, which is buy side right here, sell side, right? So we've offered buy side delivery here inside of our BISI, right? This is our whole BISI. We've offered sell side here inside of our whole SIBI. And this is where they overlap right there in between the BISI and the SIBI. That's a balanced price range, right? Because balanced price range is what? Offering buy side and sell side delivery. This ain't the only way you can get a balanced price range inside consolidation. You can get a balanced price range when the market goes up and then make a retracement, right? Buy side delivery, sell side delivery. Okay. But this is one type of balanced price range. And where can somebody tell me where does IPTA trade back to, right? When we create this SIBI, right? We created this SIBI here. We created this SIBI. We opened up here. We came all the way down here, right? We opened up here. We came all the way down here, swept out this sell side, and traded all the way back up here, right? Stop there, then drop down right there and close. Then the next day we opened up and we traded up above that high. But where did price go to? Now, this little trade all the way down here below this low right there, you say, Tim, we got a bunch of discount sensitivity right there when we went below that low. I agree with you wholeheartedly, right? Wholeheartedly agree with you. But in the sense of what price is showing us here, right? Trading down below that low right there did two things. First of all, it let us know that price is willing to go in this direction right here. It's exploring below that low. It's letting us know it's willing to go in this direction. And not only is it willing to go in that direction, when we see this rejection back off of there like that right there, it let us know that it took some stops down here, right? It took stops right here, And we got that little rejection right there. So now that it's letting us know that it took stops, what did it do? Right? Anybody who want to play the breakout and go short, they got tripped into the market, right? They tripped into the market now, right? Now, these are daily candles right here. Okay. So if you're trading on a daily time frame or any time frame, if you trade, right? If you're trading on a breakout of that low of this candle right here, right? You're going to put your stop above the high of that candle right there. Right? Especially on the daily time frame. You're putting your stop there. Okay. Now, anybody who, was like, hey, I'm gonna get long below this low right here. I'm going for a turtle soup. Them too, right? You got all kind of stops. People that's already in positions, people that want to get in positions, right? So it's letting us know two things there. All right. So now that we know all of that, where does price go to after on this very next candle here? It trades right back up, and it trades just dips into that balanced price range, right? Just dips into that first BISI that was created before going up and coming back down and getting that change in the state of delivery right there. Just goes up above that high of that candle right there. Well, we know breakout traders got they stop at right there. Just goes up into a SIBI that's in the premium of this price move right here. Right? Institutional order flow entry right there. Right? So what do we have here? We got a bearish order block that's in line with that quadrant right there. We got the ICT inversion fair value gap, right, that we talked about here, creating that BISI in line with that quadrant right there. And then we got, y'all hold on for a second. All right. So, and then we drop down, right? Opportunity. Okay. Then we come down here, boop, trade below these lows right here. Excuse me, trade below those lows right there. Remember, we talked about this. This right here was the overall market maker model. This right here was a smaller market maker model within there, right? Right. So we completed this smaller market maker model, right? Then we retraced back up. Right? We came back up, coming back up into a premium, right? You know how they say wicks do the damage and bodies tell the stories, right? Wicks do the damage and bodies tell the stories. As we're retracing back up, right? We're coming up. And then if we come over here, let's come here. I'm going to take him, put him right here. Right there. Can somebody tell me why I moved my fib to this wick right here? Can somebody tell me why I moved my fib to that wick right there? Anybody? Anybody? Nobody? Nobody? Okay. So, all right. Wicks do the damage, body tell the story. We traded up, right? Kissed that Sibby right there, right? First time we traded up into the inversion fair value gap. Second time we traded up into the bearish fair value gap, right? Came all the way down here, right? Closed below the larger market maker sell model. All right. Then once we did that, we came down, like we said, into our higher time frame, bullish order block. And on this time frame, traded down into our ICT inversion fair value gap. Right. Got the discount sensitivity. And so that's when we were saying we're looking for price to draw into that quadrant right there. Because now that we've completed a mission, completed a sell model, came into a discount PD array, this discount PD array on the weekly is designed to send us higher. So if it's going to do its job, we want to start to see it use these quadrants to climb back up. Right? Does it mean we have to go make all-time new highs? No, it doesn't. We just watch the signatures. Now, if price does this, then it should do that. All right. What stands in the way? Okay. Right here, nothing stood in the way outside of this bearish order block right here. Right. Nothing stood in the way outside this bearish order block. And if we look here, we already traded down, came back into the bearish order block there and got a nice reaction off of it. So now as we go back up into it, right, we're looking for it to fail, right? Why? Because we've come into a higher time frame PD array, and this lower time frame bearish order block already got a reaction off of it. So now if this higher time frame is in control, we should see price move back to that quadrant there. Then once we get back to this quadrant, now we've got a closure above it. So now we're looking for it to act as support and take us up back up toward that quadrant there, right? Once we get to this quadrant, we may get a stronger retracement back down, right? Or we may not. We may, because we've offered buy side, we've offered sell side, right? We may just get a nice smooth liquidity run back up higher. But were we looking for our trading opportunities? Here, 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 right? That's what we're looking for, our trading opportunities. All right. Makes sense. This does really work on all the time frames, right? You see, just like everything that we watch on the intraday time frame, the exact same thing that's happening on this daily time frame, right? You see it. You see it. And for those that was on the pre-market analysis today, you already know that we said we want to see price coming to this, because what we've done down there, price needs to come here. Healthy price action would be coming here, because if price does this, then it should do that. All right. Let's jump down to a 15-minute and run through the intraday price action real quick.
Tim, can I ask you a question, please?
Yeah, go ahead.
So I'm looking also at the daily, right?
Okay.
And that October 13th, is it 13th or 15th? The big red candle. Yeah, that one.
October 10th.
Yeah, that CB, our price is near it. Or because I'm looking away from, I'm looking at like a small picture right now. Can we use that as a PD array to go down more? I mean, to short off it?
Sure, if price giving you reasons to sell at that time, because you're below that bearish PD array. You're below that PD array anyway. So if price is showing you bearish order flow, all right, if price is showing you bearish order flow, there's nothing wrong with shorting off of this. All right, if price is showing you bearish order flow. Okay, because at the end of the day, right, on this daily time frame, remember, the daily time frame is in a sell program. Remember, we said this daily break in market structure, this daily bearish break in market structure was expected because the weekly had a reason to come down here in the form of a weekly bullish order block. All right. So the daily has a bearish break in market structure. So when your lower time frame is billing price out, right, it's a fine line that we have to walk in between, right, understanding who's in control, right? So our weekly has come down to a bullish PD array. All right. Our weekly has come down to a bullish PD array. Okay. All right. And I just got the body to body marked out because we got a really long wick down there. So I'm just looking at the body to body. On our daily time frame, we can see, right, we've come down into our weekly PD array in the discount. So now we're at the point where we're like, okay, who's in control? Is it the weekly time frame or is it the daily time frame? Are we bullish or are we bearish? All right. And you know what the answer is? What's the, are we bullish or are we bearish? What's the answer? Who can tell me what we are? Are we bullish or are we bearish?
On the daily, we are bearish.
Correct. And what else?
We were in a sell program. Now on this retrace up, we're in a buy program.
Don't hurt yourself. It's both. We bullish and bearish because the monthly and the weekly are in a buy program. So they respect them bullish order flow. The daily is in a sell program. So it's respecting bearish order flow. So it's both. Right. So who's right and who's wrong? The person on the daily time frame, the person that's trading, looking at the daily time frame, be like, oh, I'm bearish. And they would be absolutely right. The person trading on the weekly or the monthly time frame be like, oh, I'm bullish. And they will be absolutely right. Because when we look at our weekly time frame, right, the weekly is respecting bullish order flow, right? The weekly is respecting bullish order flow. You say, Tim, it traded down below that low right there. That low took out a high. Michael taught us those swing lows that's inside of an imbalance. That's not a market structure shift right there. This is your market structure shift down here. So the weekly won't get a bearish break in market structure until it comes down here. Right? So the weekly is still respecting bullish order flow. The monthly is still respecting bullish order flow. All right. The monthly is respecting bullish order flow. The monthly, right? What did it do so far on this month, right? And we look over, you say, Tim, what did it trade to? Well, let's see here, right? So if we come over here, let's borrow this. Why is that showing on the, that shouldn't be showing on the monthly time frame. That shouldn't be showing on the monthly time frame. Right. So if we come over here, y'all see that little wick right there? Y'all see that wick there? Look at that wick. That wick right there in the month of August, right? it created the most damage going to the upside right there. More damage than that wick right there. So as price is coming back down, right, you're watching this wick here and you're watching this wick here, right? Because this wick is the only wick there, right? We got a long wick there. You're looking to see how does that be used as support. And this wick right here, you're looking to see how does that be used as support, right? We come down below consequent encroachment of the monthly wick, trade into the weekly order block, right? And this so far we're getting discount sensitivity off of that. So the monthly is respecting bullish order flow. The weekly is respecting bullish order flow, right? But the daily, right? If we go to the daily, right now, the daily is still respecting bearish order flow right now, right? So when you come up against bearish PD arrays on the daily, right, in the premium of your range there, right, this is our weekly high, right, and then our weekly low is down there, right? We got a reclaimed fair value gap resting in the premium. Okay, last week right here you can see that we respected it and we came down and we took care of business, right? So we've respected it once and we've came down and taken care of business. So now, right, it lowers the probability of it being bearish again because we've come to a higher time frame anticipatory reactionary point. It doesn't invalidate it, so you want to watch to see how it reacts. But right now, right, even though we're in a sell program, right, the daily is starting to exhibit bullish order flow, right? Because we got a change in the state delivery right there, right? Change the state delivery here, and we closed above mean threshold of a bearish order block, right? So we're starting to exhibit signs of bearish or bullish order flow. Now, this change in the state of delivery and this closing above this bearish order block, that's okay. Why is that okay? Because we have a premium PD array that the daily could potentially draw back into. Now, what's weakening the bearishness on the daily, right? We failed to create an imbalance going down, right? We came back up, traded in there. This acted as an immediate rebalance, right? But we only did an immediate rebalance down to this weekly PD array. We didn't get an immediate rebalance down to the sell side liquidity, right? And now that we got to the higher time frame PD array, now we're seeing discount sensitivity, right? So that's weakening the bearishness of this daily move. But this sell program is not invalidated until we make a new all-time high, right? We got PD arrays in here that's showing you weakness of it, right? Closing above mean threshold, weakness. Getting a change in the state of delivery, weakness. Getting back on top of this reclaimed fair value gap, weakness. Trading back above this SIBI right here, weakness, right? Trading above that high right there, weakness. Closing above that order block, weakness, right? All this stuff right here would be showing you weakness of this. Now, and this is where it gets sticky, right? See how we got this fair value gap right here and this order block here, right there, that upper quadrant, right? When we get to the upper quadrant, right, what do we anticipate a lot of times when we get to that upper quadrant? A deeper retracement, all right? So a deeper retracement here doesn't automatically say, okay, yeah, we're going back down, right? Then at that time, now you're looking to see what is the algorithm leaving coming back up here that should act as support? Now we've come here. When we went down, we failed to create an imbalance, but now we've closed with the opportunity of creating a BISI this big, volume imbalance up to there, right? We got an opportunity to create a BISI that big in line with a quadrant level, right? So if we create a BISI here, right? If we create a BISI there, now you're anticipating that BISI to act as support, all right? Even if we come up here and got a deeper retracement, we got a BISI here that should act as support, okay? All the stuff that you want to, that's how you build it out going in the future. Where are the PD arrays being created, and how should the algorithm use them based off the sell program or the buy program? All right. Make sense?
Thanks, Tim.
Yep. And I saw something that you said in the chat. I appreciate the fact that you feel like I explained the concepts in a easier way to digest than Michael does. But I have always publicly let people, matter of fact, I'm gonna go full screen with this. I've always publicly let everybody know these are just my understandings of his concepts. There's no way in the world that I can teach something that he created better than him. I appreciate it if people understand the way I explain it and it makes it click in their mind. But if you want the real deal Holyfield, you need to get it straight from the horse's mouth. You know, I ain't one of the ones that come out here and be like, oh, I see T try to make it complicated. I see, hey, he lay it out the way it's supposed to be laid out. And I just share my understanding of it. Right. All right, then. Now, all right. So we opened up. We're just gonna run through this because I just heard my family come back in and I'm hungry. Okay. So we opened up with that big 107 point gap up, right? We kind of hung out in here for a while, right? We hung out there in a while. Remember when I told you that when we opened like through the Asian into London, it was just like a consolidation and a manipulation, right? Consolidation, manipulation, right? So accumulation, manipulation, and then distribution, right? That's our distribution leg there, right? We went up there and this is our distribution leg. Trading up, we're coming up above these highs, coming up above like lower time frame highs over here, but that's our distribution leg right there. All right. Now, when we was consolidating here, we had our like main range, right? This is our main range here, right? We had that high, that low, and we were just chopping in between there, right? So we came up, poked above that high right there, right? When we poked above that high, what did we say before? Remember on the daily time frame when we said when we poked below a low, right? When we poked above that high, showing the willingness for price to want to go in that direction, right? And then we took the high, then we immediately reversed and took out the low. Immediately took out the low, right? So now when we come here, right? Look, what everybody thinking when we get this large drop right there? We're either going to get a complete gap fill or we're going for this low right here because this we took out the highs. Now we say, oh, we got us a triple top, whatever, right? Dropped off, right? So now we're looking at this right here. It's strong resistance, and we're going to this low. But look what this nasty, dirty dog called IPTA did. All right. Look right here. All right. It came here, dropped down, and took out that low right there. taking out that low, what does that do? It induces people who looking to sell, right? Because they looking at this, oh, we dumping. Oh, we got our retracement back in. We retrace back in. So now if we break there again, it's time to go short, right? They come down. They probably even sold short here with these 2 down candles right there, right? They probably sold short there, but I know definitely they sold short here when they traded down below that up close candle, right? Sold short there, put their stop there, anticipating going lower, right? Nepal, gotcha. You're out of there, right? Now that push up right there, that quick drop down, then that push back up right here, back above that high, right? What is that right there? What signature is that? Somebody tell me what signature that is.
The wig snatcher.
The wig snatcher. You see right there? See how we traded above that high right there? As soon as we traded above that high right there, what did we do right here? On that 830 candle, we came down here, boop, into the wick of that order block right there, right? We came down to the wick of that order block right there. Not only did we come down into the wick of that order block right there, guess what else we came down into? Y'all gonna love this right here. Y'all see this reclaimed fair value gap right here? Matter of fact, let me do it like this right here. All right, y'all see this reclaimed fair value gap right there? All right. That reclaimed fair value gap right there. Okay. This right here. This is the time right here. This kind of stuff you look at, right? So when we created this Bessie going up, that's the first Bessie that's created when we took off there and we came down, right? Got that inversion, right? We came all the way down here, took out this liquidity, right? Came down to the lower quadrant of there. So now the business is complete right here. So when we come back up to this inversion fair value gap right here, right? What do y'all notice? Right? We come in, right, to the lower quadrant, stop, right? Then we open up here, we trade up, explore above, consequent encroachment, right? Then we come down and we create a Bessie right there, right? Then next candle open up, we come in, and what do we not defend? We do not defend that upper half. We close above the upper quadrant. We do not defend that upper half right there. So now that closure there is letting you know the algorithm does not want to use that as an inversion fair value gap. All right. But Tim, how would you know not to sell there? Right? Because price explored above there first, immediately ripped down here, and then failed to keep going. No imbalances are created after taking out this liquidity. Once we took out the overnight liquidity, no imbalances, no desire to go lower than that lower quadrant. That lower quadrant is holding the line. We sweep liquidity, holding the line, right? And then once we hold the line there, what does price start doing? Start using the quadrants to claw its way back out, right? Using the quadrants to claw its way back out. And then we do not defend that, right? So because we're not showing the willingness to continue down, we're not interested in shorting off of that, right? We want price to prove that it wants to short off of that because it didn't show us here. It didn't give us an indication here, right? Matter of fact, we created a suspension block there. We created a fair value gap there. We're starting to create imbalances on the way up. Okay. It's the little things we got to watch now. It's them little things, those little things, right? Shout out my brother. Thought some Tim jumped off the stream early with us. I knew he was going to go trade. You got to watch the little things. You got to watch the little things. Okay. So once we get that closure right? We're disrespecting the upper half, right? So now you're anticipating this to be a reclaimed fair value gap. You're not anticipating it to be an inversion fair value. At this point here, it's okay to look for it to be an inversion. But once we come down here and take this liquidity, y'all hear me say all the time, if we take that liquidity first, I don't want to sell off of that, right? Once we took that liquidity and then didn't show a willingness to continue down, I don't want to sell off that unless the algorithm shows me that's what it wants to do. All right. Because it just gave me a wig snatcher right here, right? Once we disrespect that, right, we come up, we create another fair value gap. And on this candle right here, boom, we get a wig snatcher, right? That's our wig snatcher. Then look here, what do? We come right back down here, right? And where did this candle close? In the upper half of this reclaimed fair value gap, right? It is defending the lower half. Wick doing the damage, body telling the story, right? If we look right here, what's that right there? Anybody know what that is? That's a wick, right? We come down here, could not reach consequent encroachment of that wick, could not reach the lower quadrant of that fair value gap. And then it closed above the wick and it closed above consequent encroachment. So it defended the lower half of that PD array, defended the lower half of that PD array. Next candle open up here, drop down below consequent encroachment, cannot make it to the upper quadrant of that wick, and then rallies off, right? Closing above this bearish order block. Once we offer that price right there, that's a change in the state of delivery right there, right? We got a change in the state of delivery there, boop, right there. And then when we trade back down here, right, we come back down and where do we go? We come over here to this reclaimed fair value gap there, right? Remember that? No, you don't, because we was looking at that one. But what is that? That's the first BISI that was created before we dropped down, and that piece of price right there, right? So we didn't use that one as an inversion. So guess what? We didn't use that one as an inversion, right? So we come over here to this one here, just like that, right? Looky who stole the cookie, right? We traded down, right? Dip below consequent encroachment of the reclaimed fair value gap, closed above that lower half. Open up here at 9:30, drop down, took out the liquidity, failed to get to the lower quadrant, and the rest is history. We know what happened after that. Nothing could stop me. I'm all the way up until we got back to our drawn liquidity this morning. That equilibrium of the 60-day look back. Oh my goodness. Somebody better stop him. Somebody better stop him.
So, question, the the reclaim fair value gaps. I know one was the first one created as we went to take liquidity.
Mm-hmm.
What makes you, or is it just from experience that you learn to ignore those CBs on the other side? Because I just honest, I would have missed those reclaim looking at the CBs that were right there too.
You talk about
So
this CB right here?
Yeah. So that first BISI that you had that we ended up reclaiming, that price used as support, the bottom one on the left.
Mm-hmm.
That first one you had.
I'm just trying to move this. I'm trying to keep grabbing the wrong thing.
Okay.
I do no, it look crazy like that. Let me just do this right here. There you go.
Okay. Is that just from your I mean, I know what it means. Is that just from your experience to know to use that as preferential and, so to speak, higher in a hierarchy than that SIBI? Because the SIBI
No,
got
it's based
inverted
off of,
too.
yeah, it's based off of, what I was saying before, right? Once we created this SIBI, right, we came down into a higher time frame PD array and swept liquidity.
Right.
And we failed to show a willingness to want to go down. We started using this higher time frame PD array as support, where we started stepping our way back out. Right. So this is showing bullish order flow. So now that this is showing bullish order flow, now I'm not trying to sell off of this right here because the algorithm wasn't showing a willingness to want to continue down.
No, I'm not talking about the sell. I'm saying for that bullish order flow, like I would have been looking at that as an inversion gap, that SIBI, because once we went
This
back
here?
above it, yeah, and like I said, I would have totally missed.
Well, you wouldn't be wrong because this is a inversion fair value gap, but this is your inversion fair value
That's
gap
the
for
first
this
one.
run. Yeah, this is the first one, right? So this is your ICT inversion fair value gap, but this is an inversion fair value gap, but we're not looking at this to be our inversion fair value gap.
Because the algorithm is gonna refer either to that first one or, like you saying, that reclaim that was the first gap going up.
Yes.
Okay, got to remember that. Okay,
you see what I'm saying? Because this was the first, right? So it's a stamp on it, right? There's a stamp on this one right here that says, hey, this is the first. Right now, it's a stamp on this right here that says, hey, this is an inversion fair value gap, but this is the first reclaim. You see what I'm saying? Of this move right here. And then we come over here, right? We got an inversion fair value gap there, right? For when we coming down this way, but we also have this reclaimed fair value gap right here. You see what I'm saying? So it's like I said before, where did the elephant step in the pool? This is when we took off, right? So we're going there, boom, right? We're going there, boom, right? So when we're looking back for PD arrays, right? We're this right here, that right there was the fake out, right? And then that was the wig snatch to let you know I really want to go up. You see what I'm saying? So now, since I really want to go up, now I'm looking back to what am I going to use for support, right? What am I using to buy off of? Now, notice here, right? Remember what we said before. Whenever you have, I said this a while back, whenever you have an inversion, right? But there's also a bullish PD array there, right? You're buying the bullish PD array, right? But the inversion is just the confluence, right? And so when we look here, we have an inversion fair value gap here, but we also have a BISI right there. So when we trade back down like this right here, yes, we're overshooting that, but we're stopping at that BISI right there. And that BISI is in line with that reclaimed fair value gap right there. You know what I'm saying? We got a new fair value gap to buy off of that's in confluence with a reclaimed fair value gap. So that's why I'm not looking at the bearish fair value gaps on this side, because it's creating new bullish fair value gaps on its way up. You see what I'm saying? When we came up here, like we came back down here, we have the reclaimed fair value gap and we have the inversion fair value gap here, right? But I'm looking at the reclaimed as opposed to the inversion, right? I'm looking at the bullish PD array as opposed to the quasi bullish PD array. right? And then we come up here, we got a BISI here in line with a reclaimed BISI there. So I'm looking at the bullish fair value gaps as opposed to the quasi bullish fair value. I mean, PD arrays. And it's, I don't want to say it's an experience thing. It's a, what is the algorithm telling you thing, right? That's why I always say we look at the signatures that the algorithm is giving us, and then we execute based off of the, like, I always go back to the bridge building video, because in that video, Michael, he, you know what I'm saying, he used the analogy of like the rock climber, where they always look for their next foothold or handhold. It's like they're not just willy-nilly climbing the wall, you know what I'm saying? And then if you're building the bridge, you're not just willy-nilly building the bridge, you know, the exact PD arrays that you're using to get back to this point, right? As you're climbing up out of this hole, right? You know, okay, I got that quadrant level, I got that quadrant level, I got that quadrant level, right? Once I get up here, right, I got that bullish order block, I got that reclaimed fair value gap, I got that reclaimed fair value gap, I got that inversion fair value gap, right? Now I got that bullish order block, I got that bullish order block, right? It's like you're looking at the different footholds and handholds that you can grab, and as price trades to them, right? Like we said here, right? We're not wanting to see this act as an inversion. So when we see the algorithm not defending the upper half, now we're saying, okay, I can use this as a foothold if I come back down to it, right? Then we see we blow through this right here. I can use this as a foothold if we come back down to it. Okay. So it's like, and so now that you know, okay, I have these PD arrays down here that the algorithm could use. Why? Because we're coming back up out of here and we set a order block there, right? What's an order block job? To block price. So as price start coming back down, right, we have to allow for it to come to the order block if we want to, right? And once it comes to the order block, right, we want to see that discount sensitivity, and we get it right there, right? So now we don't want to see it coming back to that order block no more, right? And then when we, let me see here, when we, this morning, let me see, 7 o'clock, right there. All right. This morning on the call, right, if y'all remember, we talked about, we had our pre-market low here, right? This was our pre-market low. Let me hide this other stuff. Well, I don't need it. I'll just hide all this other stuff. Yeah, I'll leave that rest of stuff there. We had our pre-market low. Okay. We had our pre-market high, which was 8:30, 8:45. All right. That was our pre-market high right there, because we're going into 9:30, right? That's 9 o'clock. Nope, this was our pre-market high there. This is our 9:30 candle. Okay. So let's put it into replay mode. And that's not okay. So coming into 9:30, remember we said, right? We said if price started getting heavy during 9:30, that right there is the lowest liquidity that we want to see swept for this buy program. We don't want to see that sell side touched, right? You remember when I said that? Were you on the pre-market analysis today?
I came late, but I heard you say the most you wanted to see was that swing low get swept.
Right here.
Yeah.
Right. That swing low right there. Now, looking at what we got going on here. Now, Do you understand why I say that's the lowest I would want to see the liquidity be swept? Right? Because why? We have failed to defend the upper half of this. So now I want this to act as a reclaimed fair value gap, right? We have failed to defend the upper half of this. So I want to see that act as a reclaimed fair value gap. On the top of it, we got a Bessie right there. Okay. So now I we didn't take out that low, right? So that's showing bullishness, right? We didn't take out that low, so that's showing it's like exceedingly bullish. Why? The price has started moving already. The move is already underway, right? The move is already underway, right? And then y'all always hear me say, we're in extreme premium. Let the algorithm establish a new range that you can buy in a discount off of, right? And look for price to draw up in my 60-day ain't on there. Look for price to draw up into that. All right. That's what we want to see price go to. And then we said we have a 15-minute fair value gap that can act as an inversion, but that's what we want to see price draw into right there. All right. And then let's put that back on there. And then when we see here, right there, right here at 9:30, right? So now, based off of what you were saying, like I will be looking for that to act as the inversion, right? That wouldn't be wrong. You see what I'm saying? That wouldn't be wrong to look for that to act as an inversion. Why? Because we got a reclaim there, right? Don't beat yourself up because, oh, I missed that reclaimed fair value gap, right? Because you don't need to see every single PD array, right? You don't have to see every single PD array because when you, right, if you zoom out like this right here, right, you can, we're going to look over here, right? You got in here, all of this here, right? You got a breaker here, right? Because the price came down here, came down there, right? We did a lot of dilly-dallying, then we dropped, right? So you got a breaker here and a breaker here, right? Right? Or a mitigation block there, right? You got a mitigation block there, then a breaker here, right? Because we went there, right? So you got that right there, right? We came down into that mitigation block, right? That's an old ICT setup that everybody named mama used to always look when you got the mitigation block and breaker combination, right? Everybody was buying inside here, right? That's an old setup that everybody used to look at, but ain't nobody beating themselves up because they didn't see that mitigation block there, right? But that back in 2021, 2022, oh, this setup right here was all the rage in England. Everybody was trying to trade that setup. That was a bread and butter setup right there, right? But it's other stuff that's there, but you don't want to beat yourself up because, oh man, I didn't see that. I didn't see that right there. No, right? As long as you're on the right side of order flow, right? Because look here, get out of here, reclaim, right? And then it's like the reason why my eye draw to that, because the fair value gap is my PD array of choice. That's the one that I see the best, right? So get them fair value gaps out of there, right? And we just look at price like this. Okay, we come down, right? We take out the overnight low. We manipulate out the short-term low, right? We take off, right? Order block there. Right, trade up, order block there, right? Once we get that order block here, we came here, right? First one coming out of there, we anticipating this to be a breakaway gap coming out of that consolidation, okay? We come here, right? We come here, we look like we get an immediate rebalance. Do we trade into that? Let's see if we trade into that. No, we didn't. We didn't get an immediate rebalance. Came close to it, but didn't get an immediate rebalance. But what we got here, we got this order block, right? What do? We trade back down into that order block right there, right? So now we trade back down into that order block there and trade above that bullish fair value gap right there, right? Where we anticipate in price to not go below, right? This order block and that fair value gap. You ain't got to pay attention to nothing over here at all. You know, all this stuff over here is just confluence. This is all just confluence, right? With the algorithm is giving you signatures that you don't even have to look back over here, right? It's giving you stuff in the recent price action that you don't even have to look back that far. That stuff over there, that's confluence to let you know, hey, it can reach down into this right here. And I'm showing you, I'm tipping my hand. You can see I'm playing spades with all the cards up, right? Because you see here, we're, like we said, we're respecting the wick of the order block there, right? With the bodies, right? We're respecting the wick of the order block with the bodies, right? Then we come back here, right? We're respecting the fair value gap right there, right? See the bodies of the fair value gap, or that reclaimed fair value gap right there, right? Respecting the bodies. You don't have to look over there and say, oh man, I missed that. Oh man, no, don't beat yourself up because you didn't see that over there, right? As long as you see this right here, that over there will come with more experience and more time, because it's showing you the same stuff over here, right? Because remember, right? Remember what we said when we draw our framework like this right here. What are these? We're looking for reasons to trade in the future. See what I'm saying? From here to here, right? That's our range that we're in, right? We're looking for reasons to trade at these points in the future. All right. And if we look at, and you see, all I did was just draw this out. I ain't even, you know what I'm saying, I ain't do no grandiose move. All thing I did was look for the highest high and lowest low inside this range right there. Boom. That's our dealing range right there. Right. So coming to the dealing range, we got a fair value gap created right there on equilibrium. Right. Didn't get back to it. Right. This is our bullish order block, right? Just above equilibrium there. Right. What do we got here? All of this right here is a balanced price range right there, right? We offer buy side and sell side there. We got us another balanced price range right there, right? So then if we come here, go to CE, go to the bottom of our order block right there, up to the highest high right there. What do we come to? Down to, in a discount, to our order block, the longest wick right there inside our order block. Come back down to a discount, right? And then look at this right here. This right here gonna blow your mind, right? This little area of consolidation right there, right? You see how we got a little area of consolidation right there? What is that little area of consolidation considered, right? That's an area of what? That's an area of what? All right, remember that area of consolidation, right? This is an area of what?
The first stage of accumulation.
Accumulation, right? It's an area of accumulation. Now watch this right here. I could do it on 1 minute. I could do it on the 1 minute. It don't matter. But I'm look at the 5 minute first. See where I'm at. Right here. Yeah. Go to that body there. Go to that body there. Put this right here. Do you see what I see? That's on a 5 minute chart right there. Right. Do you see what I see? Can y'all see what I see right there? When do we look for OTE? When we leave in an area of accumulation or distribution, When do we look for that 62 to 79% retracement? Is that not where price went to? It's the OTE area right here.
Oh, yeah. Wow. Yeah.
That's not where price went to.
Mm-hmm.
Y'all better stop him.
And you, the bodies take precedent because that's basically where most of the price is held.
Yes.
Instead of going from okay.
When you're looking at OTE, that's the way Michael taught it, body to body, right?
Body to body. Okay.
Yeah, body to body. When you're looking at OTE, now, are you wrong if you include in the wicks? No, not if it don't, like these wicks here aren't like crazy. So you ain't wrong, but the way he taught it was body to body for the OTE. So that's the way I draw it. You know what I'm saying? I just do it the way he taught it, you know. But you can also, you're not wrong for including them wicks, right? You're not wrong for including them wicks because you still get a OTE in this case right here, right? But the way he taught it, body to body, you know, and that's coming. But like I say, all of this, now I done showed several different ways of looking at this same price move without even looking back over here, right? And what did I do? Did it with the dealing range way, right? Look at there. Where's that fair value gap created? Right there on that quadrant. On the other time, on the 15-minute, I think it was an order block right there, right? On the 15-minute, it was an order block there, if I ain't mistaken, right? It was an order block right there, right? And a fair value gap right there, right? On the 5-minute, same thing. That's why I say it, as long as you understand how to read the concepts, don't beat yourself up for missing a reclaimed fair value gap over here. Because if we look here on the 5-minute, right, we got a reclaimed fair value gap right there. The first bid he created before we went down there and handled some business, not showing the willingness to go down, close back above it there. Once we trade back down into it, boom, reclaimed fair value gap. Same thing here, reclaimed fair value gap. It's the same thing on the 5-minute and the 15-minute time frame. But you don't beat yourself up because I didn't see that, because over here we still got plenty things that we know about price. We can just look at our dealing range. That's that basic. Go back to the basics. This is my dealing range. I got the lower half of my dealing range is efficiently delivered right there. So now all of this is efficiently delivered. So now I'm coming from here below my order block there and going up, because this was on the higher time frame, right? Going from there to there. Right. And what is this? When we look at the higher time frame, this was below my order block. But on this time frame, what is this right here? This is our latest expansion leg of this bullish dealing range right there. Where do you look for your trading opportunities? Inside that latest expansion leg. Right. We got a million different ways we can skin this cat. Right. Only thing we got to do is know why we putting it on our chart, why we looking at it, and don't like second guess what we seeing. You know what I'm saying? Don't try to see everything. If you can't see everything, don't try to see everything. Right? But if you, I thought I had stopped sharing my screen a long time ago. But if you can see it, hey, understand why you putting it on your chart and what it means. Right? Understand why you put it on your chart and what it means. And then again, I'm going to put Empire Trades on blast, right? Empire Trades, you still be coming in. Tim, can't we use that as to sell off of? Yeah, you can. But you want price to be respecting bearish order flow, right? When you're looking for reasons to sell, right? So if it's respecting bearish order flow, sell. If it's not respecting bearish order flow, you can still sell, but sell it back to a certain point, right? There's no absolutes in this. There's no such thing as absolutes. The only thing we can say is if price does this, then it should do that. And it's all about order flow and price delivery, right? Just like I go back sometime and I just go back to just basic order flow and price delivery. Y'all remember we went back and all thing we was looking at was the dealing range. We was looking at our dealing ranges and watching how price traded, because that's all we need to really understand. The PD arrays are just the footholds where I'm going to step to climb out of here. right? But the important part is understanding that bullish and bearish order flow and price delivery. My stomach growling, and I'm tired of talking. If y'all got questions, hold it to the next time. Hopefully that was helpful, man. Hopefully y'all got something out of it. Hopefully y'all got something out of it.
Good stuff.
Thank you. Thank you.
Thank
Just
you.
repeat one thing. You said OT is when price leaves an area of accumulation. And what was the second time you used OTE? Remember that for tomorrow.
Accumulation or distribution.
Or distribution.
Yeah, when you like, so if you're in a market maker model, right, and you leave in an area of accumulation or distribution, then you draw out your fibs from that expansion, leaving that distribution or accumulation. If you trade OTE, that's when you're looking for that OTE retracement inside your market maker models.
Tim, on the 1 hour right now, can we use that 0 TE right now?
My stomach growling, and hold your questions to the next time. Hey,
because it's leaving a accumulation.
Hey, until the next time, I decided to get on Al Gore's internet and share my thoughts on this thing we call price action. It's your boy, Timothy Lee Rogers Sr., aka Aranya Grande. Y'all like my new water bottle? I love my new water bottle. Hey man, y'all be safe out here in these trading streets. Gone. Yeah.